folks, Scott here, and this is the wrap for Monday, August 12th. So this morning we had a pretty sizable gap down below the prior lows. This is this is my back testing workspace here, but this is the 5-minute chart for today, August 12th, yesterday or Friday, August 9th, and Thursday, August 8th. And you see that the white line is where we opened. Actually, maybe that might be off by 5 minutes, but don't worry about that. We opened below the low of Friday. So and it was about 50-50 odds at best of this gap filling, but it did, and it did nicely and easily, and I missed it. And you can either fret over that or recognize that the object of the game is not to catch all the winners, but instead to miss most of the losers and trade the setups that have the strongest historical setups and use this information to our advantage. So what I mean by that is, okay, so we had something unusual happen. We had a large gap down that filled. Does that tell us anything about what may happen tomorrow? And actually it does and can. And check this out. Let's see. The cash indices, we broke out that wedge a little bit that I'd drawn. I showed on Friday, but we did close inside of it. That is important. And what's also important is that we closed below the 10-day moving average still. So even though we had a gap down that filled, we're still well above the 200 right here, and we're still below the 10. So what happens after a large gap down fills? Probably better show you the daily instrument. Large gap down that fills its gap when below the 10 and 200-day move, but above the 200-day moving averages. Does that tell us anything about the next day? And as you might expect, it does. That's why I'm showing it to you. It's happened about 40 times in the past 10 or 11 years. While that's a small sample size, it's pretty darn lopsided, showing a bias to gapping up on the subsequent day. About 29 out of 39 times it's gapped up, and that's been a tradable gap. You know, it's right in line, actually a little bit better than historical norms for gap filling. Hold on. That's using MTG stop parameters. So it was a little extra nugget. It's a tradable gap up. Normally I only show these with end of the day stops, but I accidentally left that on. But you know, it's a decent gap up, and using our intraday stops on a gap down is not very attractive historically. So even though the fact the gap filled, the big gap down today filled, it doesn't tell us much if we gap down again tomorrow. Actually what it tells us the bears are still pretty committed, and you need to be very careful. Versus a gap up, yeah, bulls were in charge today, and they're going to try to be in charge again tomorrow. So, interesting study here. Hopefully you find some value in it. All right, let's look at what the worksheet showed over the weekend for gaps down. We ended up gapping into an opening in several different, or a couple different zones today. We had a couple of indices that were right at or in this area here, opening between the prior close and the low. The majority of the indices, however, opened below the low. 51% historical win rate, profit factor 1.03. And I didn't get an email this time, but often I'll get an email when we have a low probability gap fill, and somebody will vent, complain, whine, and say, Scott, what in the world, man? You know, you missed it. We missed it. I followed you. I didn't make any money today. That was the easy one. What in the world happened? And this is very important, so listen closely. It's still a 50% chance of filling. A 50% chance of filling is not good enough for me to trade when the average win size is going to be less than the average stop out for me. That's just not good enough. You're going to lose money. Why would you do that? It's still a 50% chance, though. That means, yes, you can even have not only can, you will have at times during the course of a year 3, 4, 5, 6 consecutive times in a row where a low probability gap trade fills its gap. It's just pure randomness, purely baked into the numbers. So for me, this wasn't even worth seriously considering at all with the numbers that week. This was slightly attractive following a 10-day moving average down straddle, as well as after a widespread 7. But as I explained to folks in a trading room, the day was barely a widespread 7. It was very similar to the other days we've had of late. You can see that just quickly glancing. Did this day here, that was the day prior, look that much bigger than these other days? No. In fact, you had a huge one over here that wasn't being considered. So, I discounted it. And when you look at this other information I considered, as I showed in the video wrap, down gaps on Mondays after not closing at a 10-day high nor a 10-day low close. 50-50 as well, and money losers with a profit factor of 0.5. Monday down gaps below a 10 and above a 200-day moving average, also 50% losers. If the gap were large, only 25% winners. Today defied that. That's why you can't trust these small gap sizes. And and the one positive, big positive in addition to that WS7 day, was down gaps in August when less than the 10 and above a 200. And you see the numbers there, 13 of 18. 15 of 22 for a down gap, 15.22. So overall, weak to slightly attractive data depending on which market you're looking at. Mixed factors with down gaps. On a Monday to boot, no thank you. So I passed on it, and sure enough, this one worked. But it's just pure randomness, folks. I don't know how to predict which ones of these will work and which ones aren't, so I don't worry about it. But it did. I mean, these do rub it in a little bit, right? Not only did it work, it worked straight away. Now, was all lost? Nope. Even on marginal setups, which I often pass on, or almost always pass on, that's why we have range guides. Check out the 15-minute range guide data. So this is going along one tick above the 15-minute range high, which was at 84.25. I'm looking for 55 and 1.1 for the two numbers here on the weighted average. And I want to see consistency across all the indices. Greater than 55 and 1.1, check for the ES, check for the YM, check for the NASDAQ, and strong check for the Russell. Looking at the ETFs, check for the spider, check for the diamonds, neutral for the Qs, but check for the Russell. So 7 of the 8 indices. I'm almost always going to trade when you have 7 of 8 or 8 of 8 of the range guides favoring a move, even though there were some risk from the advanced studies on the high breakout not working, and the internals were a little bit neutral. But I also knew that we had the ETFs. In order for them to fill, you'd have to have the ES essentially hit its 15-minute high breakout number, because the futures sold off into the close. You can see that on Friday. So the ETFs were filling right here. So I thought it was a pretty darn good setup. I did reduce my position size in half and went long on a break of the pink line there, long at 84.50. And as luck seems to have been for the past couple of weeks, it stopped one stinking tick short. Again, that's like my 4th Buffalo trade. I was looking for 88.50, 4 points above it. It stopped not once but twice. Now the one thing I did, which I did on my way out the door to rush to school to pick up my child that had been hurt. She's fine, but she'd been hit in the head during PT, was that I tightened my stops right below the low of these 4 candlesticks. 1, 2, 3, 4. That low was 86.75. So my thought being, this was a double top forming. You often get weakness during lunch. In fact, you never want to go long on a breakout during lunch, especially around 12:15. So I decided at that point we were just too likely we were going to get a significant pullback, and put my stops 86.50, and I got stopped for +2. So it missed me by a tick. I still got +2. I can't complain too much. Now if I'd just left the thing alone, I would have ended up with, would have survived it. You know, this didn't pull back all that much. Just came back down to a little below entry, a couple points below entry, with a 4-point stop, and would have gotten out with whatever that is, 3.25 points. But I managed it in a way that I'm comfortable with, and did not take the first hour guides. They showed some risk. There was a lot of confluence up here I talked about, and I thought the best trade was the 15-minute, and I was pretty much right on that. So good day, made some money. A little disappointing to be buffaloed again, but it was a positive buffalo. Still made money, so I can't complain too much. And there you go. That is the wrap for Monday, August 12th.